Hi everyone, let's talk about Adaptimmune Therapies. It's a clinical stage biopharmaceutical company that focuses on providing novel cell therapies primarily to patients with solid tumors in the United States and the United Kingdom. As usually, we start with the snowflake and on the positive side and negative sides. Financial health is the best on the snowflake, 6 out of 6. Future growth, 2 out of 6, and also the valuation, 1 out of the 6. Basically, this is on the orange side, and the revenue is forecasted to grow almost 60% per year. Earnings are forecasted to decline by an average of 10% per year over the next 3 years. Currently, the company is unprofitable and not forecasted to become profitable over the next 3 years. And also, there's significant insider selling over the past 3 months. And I guess there's on the buyer side also was insiders. And as we check the biotech companies, we need to check this biopharma catalyst. So they have here's the drug pipeline that they have, and there's also upcoming catalyst, which is there's a hide dates on the catalyst, but there was latest news, today's announcement. Adaptimmune enters into a strategic collaboration with the Genentech to research, develop, and commercialize cancer target allogeneic T-cell therapies. Basically, they have this two drug pipeline that is on the phase 1 and phase 2. I guess, yeah, phase 2 trial in third quarter this year, and the other one, phase 1 data, displayed one complete response and disease control rate of 64% with a stable disease for over 16 weeks in 2 patients. Phase 1 top-line data has an acceptable safety profile. Dose escalation is completed September 5th. And yeah, the stocks jumped right after that, I guess. Yeah, a lot. So we see here the pump, so basically 25%. And let's check the price history. So there's client updates, product updates, earning updates that is leading to the market performance of minus 37%. And the volatility, price volatility is on the highest point. I like that this simple Wall Street has updated nowadays. We see the news as it is here. So I'm happy that they developed this side also. Valuation side, unfortunately, Simple Wall Street does not have any price targets. TipRanks does. $10 per share is current stock price target. That is meaning 61% upside. In good scenarios, as you can see on the right, high $15 per share. So if everything goes right, if they would move forward with those drugs that they are research, pretty much there I don't see anything that it could be not reachable, the $15 target. But if we check the max side, yeah, they actually had back in 2015 even $20 per share. But let's check the valuation on the market watch. Yeah, a little bit better. Highest point $17, lowest 4, average 9.33. And future growth, unfortunately, it's forecasted to decrease by 10% on the earnings side. So there's the forecasted that it could be within next couple of quarters even almost minus 200 million on the negative side, with the revenue with the estimated revenue of 9 million. Yeah, that's the biotech. Earnings per share is forecasted as well as to decrease, but since the end of 2022, it's forecasted to increase significantly. past performance, historical annual earning growth decreased by 18%. So basically, if we saw 2015, when the share price were at around $12 per share, the revenue was 4.3 million, earnings 11.5 on the negative side. And yeah, they had better years, and currently there's also as we saw in 2015, not so significant of revenue, but they had, I see here, 62 million. And that is pretty awkward. Why they cannot decrease the so much of the losses that it generates. Company is unprofitable. Financial health side, yeah, as I thought, they are debt free. They have cash, 285 million, so that's a lot. And basically, if you ask how they cannot take depth, they are just printing the shares out. Yeah, so there's the increasing shares, that for they can just print it out and invest more into the research. But total sales, as we see, are pretty volatile, but they decreased in 2018 to 2019, and currently it's 6.2 million. Balance sheet looks green. They're not paying dividends. Insider transactions, so there's individuals mostly are selling, but there's only one transactions on the buy. This year, June, I don't see any significant amount of money, so there's a 56,000, I guess, the max size of the insider transactions. Yeah. Ownership breakdown: general public holding 50%, institutions 30%, VCP firms 10%, hedge funds 6%, insiders 1.2%. Top shareholders, I see on the both sides, BlackRock decreased 34%. Do we see here, for example, JP Morgan 7.6% added. Morgan Stanley decreased by 50%. I don't see, for example, BlackRock. BlackRock is not here. Actually, Vanguard is not here. But anyway, the shares outstanding keep increasing. Sales decreased. And yeah, all-time minus 63%. Investing.com summarized the stock for long-term investors as a neutral. Moving average says buy. Technical indicators sell. Yeah, that's it. Thanks for watching this video. Subscribe to the channel, like the video, and see you in the future one.